This is CC. Welcome to the Orbit. It is Friday, December 8th. We've got stocks futures a little bit lower going into the open. We just had the non-farm payrolls number this morning, and it came in slightly hotter than expected. So we're seeing the SPY and the Qs slightly in the red, but not much. We have Treasury yields higher, and that's something to keep an eye on because that has been one of the big things powering the market higher, has been falling yields. We will see how if yields climb a little bit over the next few days, and I'll get to next week in a second. We'll see how stocks react to that if that does continue and follow through today. The next week, speaking of next week, we've got, you can see this on the SPY chart right now, that kind of bulge in the expected move. Next week, we've got an FOMC meeting, and we have the CPI number, and that comes on the 12th and the 13th. So as you can see, there is that bulge in the expected move chart. That's exactly what that SPY chart is showing, is the uncertainty around. So we're looking at the SPY. We've got about a 0.6 expected move for today. We are well inside that right now, but things could change quickly as investors absorb the jobs number after the open. We're looking at the Qs. It's about a 0.9% expected move for today. We are well inside of that. These numbers are a little bit higher. You know, if you've been paying attention to the orbit over the last week, these expected move numbers had been about 0.4% a day in SPY, and we're 0.6% today in SPY, and that was because of the payrolls number this morning. It was pricing in a little bit more uncertainty. And so that's something to keep an eye on too, is even with the market not moving much pre-market, it could, after the open, it could during the day, and keep these expected move levels in mind. The Qs are pricing almost a 1% move just for today. IWM is actually higher. We've seen that pretty consistently over the last couple of weeks, where IWM might be doing something slightly different than the Qs each day, and one will tend to outperform the other that day. So that's something to watch for, and also something to watch for if stocks were to start the morning red and then reverse higher. You might see IWM, you might see that kind of those kinds of stocks leading it, perhaps. So keep an eye on IWM. TLT, it's a glimpse into yields are up slightly. The short-term yields are up, particularly this morning. TLT, of course, is 20-year, but it is down, reflecting rising yields kind of across the board. Going back to expected moves, you can see with the SPY, we're looking out to year-end, December 29th, and we've got about a 2.1% expected move out to year-end. That is obviously very tight. You just think about that. The Qs were pricing a 1% move just for today, and we've got that number coming out next week. This is something to keep an eye on if you are positioning into year-end. There are going to be some slow volume trading days towards the end of the month, but a 2.1% expected move is quite small. And if you were looking to position directionally into year-end, let's just look at, for instance, a call. We've got the 458 call. It has a break even about 463. And if you turn that into a call spread, we've got a 458, 468 call spread. Something to look, with a 461, 64 break even, that is only a few dollars higher in SPY. And then the same is true to the downside. If you were looking for a put spread, we've got a 458, 449 put spread down to the expected move in year end, and that has a break even of about 455, so just a few dollars. So that's what we're talking about when we're talking about this 2%. We are only talking about a few dollars away in SPY for a break even.